Well, let's get a handle of, business when it comes to Mannapuram Finance. VP Nandakumar, he's the Managing Director and CEO, now joining in to talk about how the funding costs are shaping up as well as the growth outlook for FY20. Good morning, Mr. Nandakumar. To begin with, gold prices have been surging. Do you think that that is going to impact business in any way? And how are you assessing the demand for gold loans?
Yeah, it will certainly have a positive impact on the gold loans. Because some people, 10-15% of the people who are looking for always at the highest LTV, that is 75%. From them there will be an advantage. Otherwise, people used to come for a certain amount. They used to bring that much of jewelry only. So the impact may not be as projected in some circles in the market, but of course there will be some positive impact.
Now, banks are fairly reluctant to pass on the rate cut benefits, and the Reserve Bank has asked them to link retail and MSME loans to the external benchmark that's effective 1st October. How are you viewing this development? Do you think that the funding costs will ease for NBFCs?
I hope so, because there is a pressure from the RBI for the banks to bring down the rates, pass on these benefits, reducing the reduction in repo rate, etc., to the consumers. So we also may get the benefit, because there are other things too. Because during the last 6 months, many things have changed. One, for an NBFC, which is in gold loan business, when they lend to us, their risk weight was 100%. Now, with the harmonization with asset finance companies, we also get the benefit of external rating. As we are a AA rated company, our risk weight is bound to come down. It has come down from 100% to 30% for the lending banks. So this also will free them for the capital to be used for when lending to us. This way also we may be benefited.
Okay, most economists believe the slowdown reflects signs of structural components along with cyclical issues. What's your sense on the entire situation?
I think it is rather a cyclical issue. As the finance minister has said, it may not be a structural issue. So, as it is a cyclical issue, I think it may, the impact may come down over a period of time.
And what margin trajectory is it that you see in the current tough environment? Is there a case for margin expansion from here on?
No, because as and when we get this benefit or the reduction in our average borrowing, we used to pass it on to the customers. So we may pass on. With that, our margin may not improve.
Right. Wanted to understand, do you expect credit growth to pick up in FY20, and what is your outlook then on loan growth and disbursements?
Yeah, it is better now. Second quarter appears to be better than the first quarter. So we expect we'll be able to achieve whatever is the shortfall we had during the first quarter. So this year we believe that our expectation of a CAGR of 20%, what we have planned, what we have projected earlier, will be achieved during the current year.
Right. And where do you see the share of non-gold business rising to, and how has been the growth picture in non-gold segments?
The gold is expected to grow at a rate of 15% this year. So, of course, the non-gold, the growth is better. During the last year, when we closed last year, the non-gold portion was 35%. I think it will improve by 1 or 2% towards the end of this year.
Okay, great to have you on the show and analyze the impact of the uptick in gold prices. Quick look at